Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, May 21st, 2012 is sponsored by Realtik. Alright guys, let's get right into the charts. We have a rally on hand as I predicted, and again, if you watched my weekend analysis video put out yesterday on Sunday, you know that I predicted a rally here early in the week. And again, a beautiful $1.61 move on the SPY, as you can see before you here, to the upside. We really gained a majority of the upside early in the day in the first hour to hour and a half. Since then, it's just been going sideways as people have been kind of squaring trades there, pulling profits off. And again, it's consolidation. Question is, do we have one more push towards the end of the day, or are we going to come back in a little bit and sell, taking profits into the end of the day? Remember, all last week, we saw traders selling into the end of the day because no one wanted to hold into the European markets open during the middle of the night here on the East Coast. And that could be something that you could see a little bit, although I don't think you'll see a lot of it today. I think ultimately this kind of move to the upside will last about 5 to 10 trading days, and then we will resume our downward trek. But nonetheless, I think we'll probably bounce to about the 133 to 134 level on the SPY. So again, good call right there. Nailed it, of course. And again, that means we made more money here at InTheMoneyStocks.com. If you were a member, if you took the 7-day free trial, if you were a legitimate member, doesn't matter, you still got all the calls. What was the big call of the day today? The big call of the day today was to go long Las Vegas Sands at $45.95. Guess where that was? Right down here. That was our long trigger we triggered, and today alone we're almost up $2 on this position. Last week we made great money on shorts. We even had some longs out there that made us money, and the profits continue to be racked up and up and up. Members are just killing it left and right. All right. Now, again, what I want to do is let's go back to the SPY. This is the daily chart. One of the reasons why I knew a bounce was going to come in was because we had a head and shoulders pattern here, and we know how to calculate the target of a head and shoulders pattern, and we actually completed the target on Friday, so that told us a bounce was very, very likely. And again, you can see that bounce today. We have a nice reversal candle there, which should put us in a little bit of a short-term bottom on the chart, which again, I think the bounce will come into this area right up here when it's all said and done, and that'll take about 5 to 10 trading days to do. And then again, I do think we resume our downward trend on this market. Taking a look at the dollar today. Obviously, for those of you that have been following the dollar, you know the dollar is probably down from where it opened today. That's why the markets have rallied up. And if we look at the intraday chart here, that's exactly what's happened. You had a small gap up in the dollar, and it just really cascaded to the downside. Notice how once the dollar stopped falling, that's when the markets basically went sideways. And again, the dollar downward draft is what caused the rally this morning. Anytime the dollar falls, you're going to see a market that goes up. It's just the nature of the beast. It's how the computer programs are programmed to buy when the dollar falls, buy equities. And again, that's been what we've been seeing today. Now, even with a big rally on the indices, when the Dow is up 85 points, NASDAQ is up 51. That's a big, big move on the NASDAQ. S&P is up about 14.5, which is just over 1%. Even with this rally, there are still some weak stocks out there, and I have to touch on them because I think they are important. All right, financials today not really performing that well. Goldman is up 28 cents. For a move like this in the market, that is not a great move, and that's because of JP Morgan. JP Morgan continues to sink down about $1 and change today on the back of continued worries about how much that loss is from their trading side of their business. And again, Jamie Dimon had a conference call today. He presented, I think, at a Deutsche Bank presentation conference or whatever, and he basically said, you know, we're getting it under control. We're going to be fine. We're still going to make a profit for the quarter, which was good. He did say that they were going to stop the buyback, share buyback, which is a negative for now. He just said for now. And I think they're doing that just to be on the safe side so regulators don't come in and say, oh, you got to cut your dividend. He said that they're going to keep the dividend, which is a positive. But I think there's just a lot of uncertainty around JPM and around the financials in general, their exposure to Europe, you know, what exactly was this trade positioned in and so forth, and how much is the loss going to be. And that's keeping it under pressure. Having said that, I personally love JPM down here. All right, you don't hear me say that very often on financials, but I think the stock again has collapsed. You filled the gap from the beginning of the year right here. You filled this secondary gap right here as well, and considering all the key levels that the stock is now triggering, and you can see this gap right here, and then this consolidation pattern. I think this is a very, very solid level. There's a chance it could go a little bit lower. But if we go to the charts, I'll show you where the low end would be. This would be the absolute low in my opinion, and it's almost there as well. So again, you're just essentially connecting a trend line from the 2009 lows all the way to the lows of 2011, and that would give you that downside support area right there. And again, you can see they're very close. I mean, essentially what I'm saying here is I think the downside on JPM is limited on this point or at this point. And I'm not exactly looking for a big bounce. I think you're going to get a bounce back to about 36 or so. Maybe if you're very lucky, back to the 200 around 36.50. But somewhere in that range is where you're going to see the bounce when this stock does start to bounce. All right. And at that point, what you'll see is essentially a calming. People will start to realize that okay, they're still going to be profitable for this quarter, and the next quarter they're back to making their $10 billion a quarter, whatever they make per quarter, and things are going to be fine for them. All right. And again, but the key is, I think, for that is it is affecting other stocks out there in the financials. You see Bank of America, for instance, BAC is down 17 cents. That stock just continues to slowly grind lower. All right, looking at another stock, I think the big story of the day, which is being talked about in the media ad nauseum, which is kind of, frankly, it's kind of hard to listen to at this stage because it is being talked about so much, is Facebook. Facebook early in the day collapsed through that 38 IPO level. So far, Morgan Stanley hasn't noticeably been supporting it back to that level as they did on Friday. But you can see the two big sell-off candles on Panic. And then since then, we've kind of been floating up. You actually have a nice little in spirit of bullish pattern right here developing on Facebook. I honestly look at it like this, guys. I think this is another great example about how institutions utilize emotion of the small investor, the retail investor, to screw them. And again, it's not really, I mean, frankly, it's doable, so that's why they're doing it. Is it ethical? I don't know, but that's what they're doing. And essentially what I mean by that is the institutions have gone out of their way here to, build the hype of Facebook and give a lot of shares to the public. I mean, the public was able to get in. I mean, I think like E-Trade or Ameritrade, some of those were able to distribute some shares to the public. So the public was in on it. When it opened, the public bought because of the hype at $40, $42, and now the bottom has fallen out of it and it's flushed, and the panic from the retail investor, the amateur investor, has now been dumping shares. Who do you think was dumping down here? Do you think the institutions were dumping down here, or could it have been the retail investor who was panicking? Oh my goodness, panic emotion. Oh no, this is bad. I'm going to sell. I just got to take the loss. They dump it. Who do you think's buying down here, folks? All right, while the little guy sells, who do you think's buying down here? And I would almost want to wager that within 2 weeks, Facebook's back above $38. Now we'll see. Maybe I'm wrong, but we'll see. But I would not be shocked if that's the case. And again, it's a pure and simple build the hype up, get the retail investors to buy in, flush it, get them out. Now, in all fairness, it's down about over 10% from its $38 level, basically 10%. Accumulate there and then start to run it once all the little guys are out. All the weak hands. Essentially, you're taking out the weak hands at this point, and you're leaving it to the institutions to just accumulate. And again, there's no guarantees that that's really what's going on, but I've seen it before. I'll see it again in my life, and this looks like a prime example of what is going on. All right, so having said that, is it a good play right here? That's debatable. I mean, it's still a high-risk trade any way you cut it. But again, as I said before, it would not shock me one bit to see this stock trade back to the 38 level within a week or so, maybe even sooner, as all the little guys are now scared and out of the play. Okay? So just a little side note there. Yahoo, on the other hand, sold its position in Alibaba. The stock gapped up, then sold off, and has just chopped around. Really, to be honest, a pretty poor performance there on Yahoo. Apple's having a monster move. I gave out this master level last week, and even the week before, I said where Apple was going to go, and that level was right here. And sure enough, look at the low here on Friday. That trend line resistance support right there. Thus, it hits there. Look at the bounce up, $22.50 on Apple today. Great move on AAPL. What else? IBM's having a good bounce. Research in Motion's bouncing today. JPM, again, as I said, is down. Exxon and Chevron are trading flat to slightly higher. We are getting a little bit of a bounce in oil, although it's not a huge bounce, but up about 54 cents on the USO. This traded into my master level right here. You can see this little pivot low right there, and the bounce comes in. Bottom line is this, folks. At InTheMoneyStocks.com, I'm a chief market strategist. My partner Nick is a chief market strategist. We have developed proprietary secret abilities that we will teach you. They're proprietary techniques to utilize to analyze stocks and find levels to buy and go short, or just know when the market's going to dump out and go up. And we're here to teach everyone out there who wants to learn. You join the Research Center. It's geared towards swing traders and investors. we're going to give you swing trade alerts. Like the LVS trigger today, we sent out a text email alert. Already up basically $2 for members who picked that up. I mean, that's an awesome trade. One day, we entered it this morning as a swing trade, already up $2. We'll probably hit first target tomorrow, my guess. All right. Last week, GG was a long play. As the market's collapsing, we found a master level there. We already sold half for a major profit, holding the second half. I mean, it's just there for the taking. We're going to give swing trade alerts, and we're going to teach you these proprietary secrets. There's a 7-day free trial. Come here. Everyone who took a 7-day free trial over the last week has made so much money. They basically paid for years of the service just in the free trial period. All right, come check it out. I think personally, I mean, the trades are one thing because we keep on, our track record is 80-90% winners. But the bottom line is, I think the real secret and the real key to becoming a member here is the elite status you achieve by learning the secrets of the pros, the secrets that we teach you, that we have learned. And if you can learn those secrets, you will be a profitable trader for the rest of your days in the world. No matter if you're day trading or swing trading, doesn't matter. Again, free trial to the Research Center for swing traders and investors. Free trial 7 days to the Intra Day Stock Chat for day traders. We encourage you to come to InTheMoneyStocks.com. Start learning from the pros. Start profiting with the pros. Leave it all behind, folks. Leave the hype of Facebook. If you tried to buy it at the open on Facebook, you're just as guilty as the average person out there. All right? You have to read the charts. You have to understand the way the manipulation works, and then you can start finally making money on a consistent basis in the market. Have a great evening, guys. Again, we'll see you here at InTheMoneyStocks.com. Take care.